YouTube, we are back with another lesson. Today, I got a little rant I want to go on about. I'm not going to go through any trades or any analysis. I got one open trade on the screen. I'm up $260. Um, but that's not what I want to talk about. What I want to talk about is a couple of myths that I wish I knew earlier before I became profitable. I wish I could have known this. I wish there were more people saying this from the start. But through my own experience, through my own learning, through my own failures, only was I able to learn that these things are all myths of Forex trading. I'm not talking about stock trading. I'm not talking about futures trading. I'm not talking about options. I am talking about foreign exchange trading, because some of the stuff I'm about to say might only apply to the foreign exchange market. And specifically, the first myth that I want to go over that probably only relates to the foreign exchange market is using a stop loss. I wish when I first started, I could have learned, or someone could have told me, that I don't need to use a stop loss. That's all you hear on the space nowadays. Stop loss, stop loss, stop loss. Everybody uses a stop loss. How does everybody use a stop loss when 90% of traders fail, but yet all these people are profitable? It never clicked with me. I never understood that. I was doing what everybody else is doing, and I was expecting, hoping to become profitable. But what I didn't realize is you can't hope your way to be profitable in these markets. You can't use a stop loss and just hope you don't get stopped out and it just goes in your direction with whatever fake strategy you're using. It's not going to work. It's a losing game over the long run, at least for me. The Forex market is too erratic and too volatile to use a stop loss. When you use a stop loss, you're going to die by 1,000 stop loss hits. Death by 1,000 paper cuts. That's all the stop loss was for me. Was death by 1,000 paper cuts. They talking about use a stop loss because you'll blow your account. What do you mean? I was blowing my account with the stop loss. So that just wasn't true. It took a while for me to get this in my brain and understand that stop losses don't control risk. And they never did. It's fake. And I'm like, yo, somebody is lying, man. Some gurus, whoever's bringing this rhetoric out into the public is lying. They want us to fail. They want us to be liquidity. That's all I know. Think about it. I wasn't expecting to actually do any market analysis, but looks like I don't have a choice. Why would I use a stop loss when the market moves so erratic? Look how this market moves. What am I going to use a stop loss for? Look how it moves. It just moves up, down, up, down, up, down, up, and it's probably going to come down again. Why would I use a stop loss? And then you see these people say, well, what if it goes too far in your direction? Okay, that's fine. I'm going to be using small lot sizes like always. So if it goes against me, I can either keep adding to it. As it goes against me, I can just keep accumulating as it goes against me and wait for the drop so I can exit and profit. Well, they say, well, what if that doesn't happen either? Okay, that's fine. I don't add anything. What I'll do is, if the euro is strong, right? If the euro is strong, I'll go hop in euro buys on another pair. I'll go hop in euro buys on another pair and ride it on the way up. And then what I'll do is I'll cancel some of my negative positions on one pair while I'm closing profits on another pair. I don't have to use a stop loss. Using a stop loss is the most unprofitable way to trade. And that probably is a hot take right there. That's an unpopular take right there. Having a stop loss is the most unprofitable way to trade. You will lose your money. I guarantee you. Those win streaks, they don't last that long. But what I can say is, when you don't use a stop loss, those losing streaks that you're guaranteed to have, you can avoid those. You can avoid those losing streaks and get out at a break even, a small loss, hedge yourself with other positions and still get out at a profit. There's just so many ways to manage your risk that you don't need to use a stop loss. So it's fake. They lied to you. And now the next myth I want to go over is flipping accounts. You cannot flip accounts. I thought you can start off with $1,000 account, $5,000 account, $10,000 account. I'm gonna be honest. One thing I learned about trading is you need a lot of capital. You need like minimum 50K. Minimum. If you don't have 50K to trade with, it's really hard. Even 50K is such a small amount in the trading realm. Because when you're trading at least the way I trade, professionally, managing my risk appropriately, I could be in a lot of positions. I'm in 3 positions, 4 positions right now. Some of these positions will be in drawdown. Some of my positions will be in profit. I have to constantly manage all my positions at once. So I need margin. I need capital. I need to be able to hedge myself. I need to be able to add to my losers to average down so I can get that pullback and get out at a profit or a break even. You need capital. You need capital. And when you have capital, that allows me to risk small, but still be able to manage all my positions, but still be able to manage paying all my bills. You see what I'm saying? To still be able to scale up, you need capital. If you have $1,000 account, $5,000 account, $10,000 account, it's going to be really difficult. And that's what I understand more than ever, even now in my trading career. It is so difficult if you do not have capital. You need capital. Capital is probably the #1 thing you need. Because if you have a $100,000 account and you can trade with 0.01s, 0.05s, whatever the case is, you can pretty much trade like a baby and still win your trades. You can trade like a little baby, like a little buy shell, and you can still make money because you could never lose. When you trade with a 0.05 on a 100K account, how are you gonna lose? The only way you're gonna lose is if you sit there and literally close out the trade in a loss. Because if you hold it, if you add to it, if you do whatever with it, it is bound to eventually come into profit, and you can close it for a profit every single time. Because the game of trading is all risk management. If you still haven't understood this yet, well, let me be the first one to tell you. Trading is just risk management, and that's all it is. It's not strategy, which is another myth I want to go over. It's not strategy. It's not flipping accounts. It's not risk to reward ratios. It's not win rates. It's just controlling risk and coming out with a profit. That's it. But as I previously said, that's the next myth I want to go over, is a strategy. There is no strategy. I don't know if people know this, but only 5 to 7% of retail traders make up the foreign exchange market. That means all these moves that are happening are from institutions, hedge funds, big banks, corporations. These are the ones moving the market. These are the ones moving the market. All this movement is not retail traders. We're just riding the wave. We are riding the wave. So because of that, what strategy can you look at? It's just volatile. What strategy is it? The price is going up and down. What strategy are you using? All price is doing is going up and down. The market is erratic. The market is unpredictable. Your strategy has no predictive power of where price is going to go. That's the reason why you can have the perfect little strategy and still go through a losing streak, because it doesn't have predictive power. The only way to have edge in this game is to control your risk and not lose it and come out on the other side and profit. That's the game. Strategy, it just doesn't exist. If you want to ask me, hey, what was your strategy on this trade? Why did you take this trade? Okay, well, let me tell you. The pair has shot up with bare minimum pullbacks. You see we have a nice parabolic move up with a slight pullback. And look at price action. It's slowly trickling up. Look at the momentum. Look how it's slowed down. It's slowed down. So therefore, I took a sell. And we're also at I think a weekly resistance right here. We're at a weekly resistance level. We're at a weekly resistance level. We haven't had any pullbacks. So I thought, hey, why not take a small trade here? If it goes against me, I'll add to it and I'll wait for the pullback, because when the pair is really overextended, it's going to pull back. If you don't believe me, go look at any pair. I don't even need to show you. Go look at any pair. When it gets really overextended, you will, one way or another, get some type of pullback. Well, if it's a 50% pullback, 80%, or a 200%, you are going to get some type of pullback before we continue the trend. And that's why I took this trade. The pair is overextended. Euro isn't doing anything strong fundamentally. Very basic. We just had unemployment come out worse than expected. Why not take the sell? There's nothing supporting a strong parabolic move up that's just going to keep going up forever. There's no crisis going on. There's nothing going on. If anything, the euro should be weakening right now based off the data I've just seen. So yes, I took the sell, and it's as simple as that. That isn't a strategy. It's me making an observation, a prediction, an analysis, and then controlling my risk while I take action on the analysis I just had. That's it. That's the game. Every time I place a trade, it's not the same reason. It's all objective. What's going on with price? What does economic data look like? What are institutions doing? I'm looking at the COT data reports, the Commitment of Traders data report. I need to see what are institutions doing. What does the economic data look like? I'm putting all these factors in together while controlling my risk, and I'm just throwing darts at a dartboard. Sometimes I'm wrong, sometimes I'm right. But when I'm wrong, that's why I hedge myself with small positions like Euro Aussie. I'm down $2,000 in Euro Aussie. Like, do you see that? I'm down $2,000 in Euro Aussie. I'm up $250 in Euro CAD. And if I wanted to, say I hit for $600 on this trade and it hits my take profit, I can trim off $200 of losses of positions on Euro Aussie as it's coming down. I can trim off that position. I don't have to just sit there in a loss. I can slowly trim off. That's why you need capital though. But look, I just want to go over a few myths of trading that I wish I've known when I started, because if I knew these myths from the beginning, I could have excelled at my journey a lot faster. I could have already known, hey, let me stack up bread now. Let me trade. I only have a $5,000 account. Let me trade with 0.01s only and just keep slowly growing my account while I'm working a job, stacking it up. Like, you need capital. I wish I would have known this. I wish I would have stopped using the stop loss. I wouldn't have lost so many tens of thousands of dollars in my first 2 to 3 years of trading. I could have saved all this headache if I would have just known that it's all fake. I don't need a strategy. I don't need a stop loss. I need capital, and I need to control risk. And then I need to add economic data, fundamental analysis as extra, a little whipped cream on the top. Because that's what really puts the bread on the butter, That's the extraness. So I can get a sense of the direction. But even then I can still be wrong because there is no predictive power. I don't know what's going to happen. I thought I had a good economic analysis with Euro Aussie, with Swiss Yen. Them trades went straight against me. Now I got to manage myself and get out of them because that's the game. If you can't handle the game, well, you shouldn't be in it, man. You got to be on the sidelines. But with all that being said, if you appreciated the lesson, hit the like button, hit the sub button, hit all the buttons there is. Give me some interactions. And hey, man, control that risk, protect your capital, and do not fall for the myths of trading. I appreciate y'all, and I will catch you guys in the next lesson. Let's go.